Hi everyone, this is Eric from Traders Helping Traders with this week's Tricks of the Trade. We had an interesting question come our way via the trading forum this last week, and it had to do with which time frame is the best time frame to be trading, whether we should be position trading or day trading. Well, there's a few personal considerations you need to make regarding whether position trading or day trading is best for you. And in a nutshell, it amounts to how much capital you have and how much time you have. It's kind of like an inverse relationship. The less money you have to trade with, the more you will probably benefit by being a day trader. Unfortunately, being a day trader usually means that you have to commit a little bit more time to your trading each day because you have to be there as the markets develop. As a position trader, you have the luxury of checking your charts at the end of every day. However, the positions that you're taking will usually involve greater capital, both in terms of investment and in terms of risk. But having said that, let me point out to you that the charts themselves are identical. The signals are identical. It does not matter whether you are trading a 3-minute chart, a 5-minute chart, an hourly chart, a daily chart, a weekly chart, or a monthly chart. I take the exact same signals off of every chart. Here, for instance, we have March coffee from a couple of days ago. Now, I've received some emails regarding how did we get the coffee trade off? Because a lot of you were looking at this and saying, well, coffee is in an uptrend, why would Eric be shorting it? Well, quite simply, it was up against resistance. And how did I know it was up against resistance? Well, if we draw a trend line across the recent highs, you can see that the market encountered resistance. Remember, a trend line is a tool that we use to help us identify significant support and resistance areas. In fact, if we draw our line across here, look at how many hits we have in this region that we may not have noticed without the benefit of the trend line. I do the same thing on an intraday chart. I will draw a dominant trend line. In this case, the market is in an uptrend, so I have my uptrend line. And if I see the market begin to consolidate or wedge up a little bit, I will draw the appropriate trend line for that. So we had the market wedging up like this. It was trading up against our resistance area, so we looked to short it below the low, which was somewhere around there. Then the very next day, boom, we got a big fall off. And I was conservative with my profit target. I took profit early, as I like to do, but you can see where the market came down to. It came down to the support near our 20-period moving average. And if it continues lower from here, well, we would anticipate that it's going to try to intersect this trend line down here. I do the exact same thing on a daily chart as I do on an intraday chart. I trade it exactly the same. And you should too. Don't make it any more confusing than it needs to be. You're not going to win on every single trade. But so long as we win on the majority of the trades, we should stay in the black. And that's this week's Tricks of the Trade.